Well, Palo Alto reported better than expected results on earnings and revenue in its most recent quarter. However, the shares are down. For more on the cybersecurity company's results, we're joined by J Nowinski. He's equity researcher of software at Wells Fargo, and he joins us now. Andrew, thanks a lot for joining us. I'm seeing that the stock is down by about 5% in pre-market trading. It's a case of the outlook, according to the take of Bloomberg News. The outlook failed to fully ease growth concerns. What's your take on the most recent numbers at Palo Alto?
Yeah, sure. Thanks for having me on, Paul. So you're right. Yes, the results last night I thought were very good in light of the tariff disruption that was created in early April. I mean, if you look at their product revenue, 16% growth in products, subscription revenues up 15%, net new ARR of $310 million exceeded guidance. RPO came in at the low end of the range. That's probably the one metric that you can see a clear impact from the tariff discussion. So this is one of the first companies to report that's an April quarter end. And remember, on April 2nd, when the tariffs were announced, a week went by before the extension was announced. So there's definitely a disruption in the last month of their quarter that I think they still delivered, in light of that disruption, still delivered really good results and recovered from it. RPO came in at a little bit at the low end of the range, but nonetheless, now I think bears are a little bit worried in terms of the Q4 results or the guidance they gave. RPO is expected to ramp up pretty significantly, going from about $13.5 billion in Q3 up to a little over $15 billion in Q4. So it's a pretty steep ramp, but you have to keep in mind that there was definitely some deals that pushed out of Q3, and management said they have a really good visibility into the pipeline for Q4. So we don't have any concerns with that, but I think that's where the bears and the selling pressure is coming from. Is this is the first company to report RPO at the low end of the range in a steep ramp for Q4.
Outside of tariffs, how much of a risk is there just from U.S. government spending? There's been all these concerns with DOGE and what Elon Musk is going to do to cut government spending and contracts. Does Palo Alto have a lot of exposure to that risk?
Well, Palo Alto certainly is well entrenched in the U.S. federal sector, and DOGE is focused on finding efficiencies and cutting some headcount where to create those efficiencies. But on the cybersecurity side, they're not cutting cybersecurity projects. Cybersecurity is absolutely one of the top priorities for the U.S. government, and Palo Alto has solutions, of course, that not only are best of breed, but also can help agencies run more efficiently using their AI-based solutions. And so cutting headcount and AI, I think, they go hand in hand, and this actually should benefit Palo Alto.
You said in the recent past that, in your opinion, Palo Alto has the most comprehensive, best-in-class portfolio of cloud assets. Talk to us more about that.
They do. And so, I mean, if you look, it's not just the cloud assets, but it's across their whole portfolio. If you look at what they call their platformization customers, they had 1,250 or 1,250 total customers that have deployed their platform as of last quarter. And those customers they landed were spending like $90 million deal. They had a $46 million deal. And they account for about 30% of their total ARR. Even though that 1,250 is only about 2% of their installed base, they're spending and accounting for 30% of the ARR. Now, when you look ahead over the next 5 years, their goal is to get ARR from $5 billion to $15 billion. And they said to do that, they need to basically double the number of customers that buy into this platform to get it to about 2,500 to 3,500 customers. And that would be about 60 to 70% of that $15 billion. So you can see just getting customers to buy into their broad platform of solutions really has an outsized impact on their ARR.
You may have mentioned this already, but what are some of the key growth drivers in terms of sales at Palo Alto, in terms of products and the names of solutions that they are able to provide to their customers?
Sure. I mean, there are three main sort of growth drivers or key pillars. Number one would be what they call Prisma SASE. That's really where the evolution of the network security market is moving to, going from a perimeter-based infrastructure to a zero trust architecture. And their SASE solution is one of the two best in the market. Between Zscaler and Palo Alto, they have the two best solutions. They said their SASE growth was about 36% year over year. It's been in the high 30s all year. The second one they call their Cortex Cloud. It's their cloud security portfolio. That's another one that is well above $1 billion in ARR already. Very comprehensive. It's not just like, we saw an acquisition via Wiz or via Google with Wiz for $32 billion. That was basically a CSPM solution. That's one component of cloud security. Palo Alto has the complete platform in cloud security. They have CNAPP, CSPM, cloud workload protection. And then the third one really is this AI security operations center pillar, where that's where I feel like they've got the most differentiation. They've got by far the most advanced set of solutions covering models, agents, and data now. So if you really want to roll out AI in your organization, you have to secure all three elements: models, data, and agents, and they're the only vendor that can provide that for you. So those three pillars are really are really the top growth segments for Palo Alto.
On that theme, do you expect Palo Alto to be doing M&A at all this year, or is it something that they've already got their pipeline filled out, and is AI is a theme that they're well suited and don't need to buy anything to fill in some goals and gaps?
Yeah, well, they just acquired a company called Protect AI to continue building out that AI portfolio, and that was for about $700 million. They acquired a company called Dig Security a few years ago on the data for securing data security, and these are all elements of what they're calling this Prisma AIRS portfolio for AI. And so I would expect them to continue making, modest M&A transactions going forward. They definitely, they have some solutions they've built organically, but they grow by acquisition, and they've built out their entire cloud security portfolio via acquisition. So they've done a really good job there. They're masters at integrating these acquisitions. So the more they can do, it seems like the better off their portfolio would be. But right now, I would say they've already got what they need on the AI front.
Andrew, thank you so much for this conversation. Andrew Nowinski is equity researcher of software at Wells Fargo. He has an overweight rating on shares of Palo Alto and a price target of $235 US per share. The stock is currently trading at about $195 US. Still